Good morning, esteemed listeners and investors. I want to welcome you to another edition of our Monday morning breakfast session. I am Akinyemi Omatayo, and joining me this morning is Mr. Taufik Akolade.
Good
Morning,
morning,
Mr.
Mr.
Taufik. Good
Akin.
morning.
Good morning.
Very quickly, I'll be taking you through the happenings in the fixed income space, what happened last week, and what we can expect this coming week. For money market and treasury bills, we saw strong system liquidity bolster the open repo rate and overnight rates, which settled at 26.50% and 26.90% respectively by the week end. This liquidity, driven by stability, reflects financial systems and comfortable cash position. The treasury bill secondary market wrapped up the week on a bearish note, driven by month-end profit-taking activities as investors locked in gains. This selling pressure led to a 7 basis points increase in average yields, which ultimately closed at 17.77%. Excuse me. The shift reflects investor strategy to realize profits at month end, impacting market sentiments and yields. The CBN latest NTB auction witnessed strong demand, with investors bidding 385.66 billion above 290 billion on offer, resulting in an oversubscription. Despite the high demand, the CBN opted to allot the full 290 billion. A key outcome of the auction was the decline in stop rates across all tenors, indicating a decrease in yields. Specifically, stop rates fell by 74 basis points for the 91-day bills, 70 basis points for the 181-day bills, and 42 basis points for the 364-day bills. This decline in yields suggests a positive sentiment in the market, potentially driven by ample liquidity or expectations of future rate movements. For the bond market, we saw the federal government bond secondary market concluded the week on a bearish note, driven by investors' profit-taking activities. As market participants sought to lock in gains, sell orders dominated the market, outpacing demands and putting downward pressure on prices. This imbalance in supply and demand ultimately led to a bearish sentiment, reflecting investors' cautious outlook and potential shifts in market dynamics. Across various tenors, yields experienced declines, with short ends seeing an average decrease in 15 basis points and long end registering a 14 basis points average drop. This suggests a relatively uniform shift in market sentiment, with investors adjusting their expectations and driving yields lower across different bond maturities. For the FGM bonds with maturities in 2026, 2027, 2029, 2031, 2033, 2035, 2037, and 2053 were amongst the most actively traded instruments during the week, indicating investors' interest in both shorter and longer term bonds. Benchmark bonds experienced a decline, averaging 14 basis points decrease and ultimately settling at 16.39% by the week's end. The decrease in yields may reflect investors' expectations for future interest rate movements or changes in market liquidity. For the foreign exchange market, the Naira witnessed a depreciation in value as we saw a negative 0.05 change in the NAFEM window, closing the week at 1,535 Naira 0.3 kobo as compared to 1,534 Naira 31 kobo in the previous week. As for the forwards, we see rates continue on a steady increase from the 1 month to 1 year forwards. Outlook for the week, we see funding rates are expected to come under pressure due to anticipated liquidity outflow from the system, triggered by settlement from FGN, NTB, and primary market options. Without a substantial influx of funds to counterbalance these outflows, market liquidity may tighten and potentially drive up funding costs. Trading activities in the treasury bills market is likely to remain subdued this week as market participants await the outcome of the upcoming primary market auction. And lastly, for the bond market is expected to mirror system liquidity as market participants closely monitor cash flows and liquidity levels to inform their investment decisions. That being said, we implore our lead investors to take advantage of the market by taking position now. This can be achieved by subscribing to a wide array of products ranging from our lead fixed income fund, which prioritizes capital preservation and growth, offering a low-risk investment option with biannual dividend payments, However, it is essential to note that the fund comes with a 90-day lockdown period during which investors cannot access their fund. It is worthy to note that currently the yield on the fund stands at 18.73%. We encourage investors to take advantage of this. For investors seeking a balanced portfolio, we recommend the Lead Balance Fund. This fund diversifies instruments 50% in high quality stocks and 50% in fixed income instruments, offering a medium risk profile with a mix of equities and fixed income instruments. Helps investors spread out their risk. It is suitable for investors willing to take on a moderate risk potential or for potential returns. Investors can choose to reinvest or collect their annual dividends with a lockdown period of 90 days. It allows for relatively easy entry and exit from the fund. The Lead Balance Fund is currently running an annualized yield of a whopping 40.18%. We encourage lead investors to take advantage of this. For investors looking to invest for a fixed period at a predetermined rate, we recommend the Lead Gazelle portfolio. This portfolio offers tenors ranging from 90 to 365 days, providing competitive rates that surpass your standard commercial bank rates. We encourage investors to reach out to us to enable us share our current rates if interested. For investors seeking to protect their assets from depreciating naira, we recommend our Eurobond trading platform. This platform allows clients to invest directly in US dollar denominated debt instruments, earning returns in the same currency with biannual coupon payments. Please note that the minimum subscription to this platform is $200,000. For investors who cannot meet up to the $200,000 threshold, we introduce to you the Lead Dollar Fund. This product offers a viable alternative with a minimum subscription of $1,000 and holding period of 180 days. Dividends are paid biannually with a low risk profile at a 9.23% annualized yield. That being said, for the fixed income space, let me hand you over to our in-house equities analyst, Mr. Taufik Akolade, to give you insights on the happenings in the equity space and what to expect this week.
Good morning. Good morning, Mr. Akinyemi. Thank you for the insight into the fixed income market and all Lead Capital value claims. Good morning once again. And thank you for joining this call. Lead Capital PLC will continue to use this platform to share our thoughts on equities market and the fixed income market. So this is another new week. We'll also be taking through this in the outline, but more importantly, we have also done what we call it, a standard analysis to also cover some top stocks across the sectors, because we've seen a lot happening in the equities market. Companies are bringing out results, and we've seen a lot of rally around major and highly capitalized and middle capitalized stickers. But we are trying to just bring out some companies we believe they have extremely done very well in the area of performance, because the half-year results and second quarter results of some of the companies are already in the market, and the market will continue to witness that. So the rally we have also seen in the market, this is the last week happens to be the 10th week market will be on a positive trajectory. And then occasioned by the corporate results we are seeing in the market, very impressive. And a lot of people are also taking position in anticipation of better corporate performance, because we've seen moderation and improvement in key macroeconomic indicators, which is also happening in the global space. US is also holding the interest rates. So Nigeria is also not left out. So these are the things that is really driving the markets. Of course, that will continue to promote and then the buy interest. So last week, we saw that for last week as well, Bull also took over the market. So Monday to Friday, we could see that the AXI also moved up by another stronger basis point. But in terms of the trade volume also increased last week, because the results that market witnessed also promoted buy interest. And we have also said it that the major driver of the equities market in terms of the capitalization, in terms of the results, is financial service. So that's why anytime you see this pie chart, you will continue to see major activities around financial service industry. So last week, financial service also cornered almost 68%. And we're also seeing some results around consumer goods. We saw what happened to the USA because of the new effort they're also taking, acquiring another company to also boost their production and also expand their cost. So last week we saw what happened, that for entire 4 days of the last week, USA gained consistently for like almost 5 days. So that also increased activities around the consumer index. So in terms of a week to change, we saw that market also gained 5.07%, which was higher by what we had in the previous week. And we've seen that a lot of company results that are also hitting the market, they've been very, very impressive. But we also compare that to what they did in the previous year. And the market, investors will continue to price and invest in tickers that have posted good results, because that is also giving them confidence that the 2025 financial return will be better than in 2024. So you markets, tickers that are not bringing out good results will continue to suffer price depreciation, while those that are also churning out good results you are likely to see the uptick in the prices. So last week we saw that the volume was also higher by 31.49%. So that was the reason why we saw 1.947 billion worth of trades from the 4.85 billion total shares traded. And when you also compare that to last week, even the value was also higher. But one thing we should also notice that in terms of the major drivers of the volume and value last week, we could trace that to FCMB, Fidelity Bank, Universal Insurance, because it also accounted for like almost 25.69% in terms of volume, while in terms of value, they also control 10.57%. If you look at the tickers, all these tickers, you saw FCMB, you saw Fidelity Bank and Insurance, you are seeing more buy interest. So in terms of capitalization last week as well, we saw ASI has also tested above 140,000. We had already actually anticipated in our last week analysis that it's moving towards 140,000, but it has also surpassed that expectation. And the similar thing is also likely to play out this week, because market will continue to receive corporate results that are above or even meeting the market expectation. So last week, you could see that only 3 indices closed on a positive note. Banking, we saw Wema Bank moving up. Even consumer said about the UAC, more by interest. Even NASCON Allied, their results are also very impressive in the market. The same thing in industrial. We saw activities around Bois Cement, Lafarge, and even Dangote Cement, even Better Glass. These are the reasons why you see expansion in the indices when major stocks under those indices are witnessing price uptick. So let's just go to our update on the earnings. So we've talked about some of the results market had witnessed. We talked about the Lafarge, Bois Cement, Dangote Cement, NASCON, and other companies. But last week we also saw that Star Aviation, which is another tickers under aviation industry, we've seen that the profit for the period of 20, that's half-year profit for the period, they have been able to grow their profit from 155.43, that's from 3.1 billion they did in 2024 half-year to 8.1 billion. When you try to look at the impact of that on their earnings, it has also moved their earnings up by similar percentage, earning from 2 naira 35 kobo and 6 naira 1 kobo. We also look at the UPDC. Of course, we are trying to expand our coverage around aviation. We have NACO under aviation, but we are doing analysis on the NACO. We are likely to bring it in, whether it's buy or sell. But in terms of UPDC, UPDC has been part of the capital recommendation for a very long time. And then we've also anticipated that what we have seen and the move they have also made in the Q1 is going to result to positive improvements in their earnings per share for the second quarter. So we are seeing that playing around now. So UPDC still form part of the capital buy recommendation. So more results are also coming. Arade has been able to also grow their earnings per share from 23 naira last year to 33.26. Why Oando under the capital recommendation? I think this time around we are also placing on Oando under a thorough review. But we have seen that their basic earnings per share is still 5 naira. What they did last year is still what they did. But the capital research analysts will conduct more analysis. So you're likely to see Oando under review in this week's recommendation. So in terms of top stocks, you have to pick across all the sectors. So because it's important that so many tickers are coming out, bringing down their results. But we have done a better analysis by trying to segregate all various sectors we have in our market. In the banking, for this week, we are placing Access Bank, ETI, Wema Bank, and Zenith Bank as the top 4 banking stocks you can pick And we've also ensured that major key metrics that will drive the price and are also deliver the better return to the investors are also considered. We've considered the earnings per share. We have also considered price to book ratio, and we have also done a further analysis to also look at the efficiency ratio in the area of profit margin, asset turnover, and other key metrics we believe will serve as factors that will determine the stability of these companies in terms of valuation. So for topics for this week, of course, we have a general recommendation, but for the benefit of this program this morning, we wanted to focus more on all these stocks for this week. So for the banking, Access Bank, ETI, Wema Bank, and Zenith Bank, the top four banking stocks. ICO, where and Master Insurance, that's under insurance. Under in industrial as well, we have Better Glass, we have Better Paint. And for the cement as well, we have three companies, but for now, Dangote Cement and WAPCO, they are top picks for this week. While consumer, we have NASCOM, we have Honey Flower. Agriculture, we have Fresco. Healthcare, we have Mozambique. Aviation, we have NACO. I've said it in the course of this presentation. We're also doing an analysis on the Sky Aviation, and we'll also determine whether it's worth buying for our value customers because EPS alone does not justify whether the stock is on the value. You also need to consider other key metrics. So for the oil and gas, we've seen Arade, we have seen Seplat, we have also seen their half-year performance, and they are also even surpassed market expectation. So for oil and gas, the top picks for oil and gas, Arade and the Seplat, White Telecom, Airtel Africa, and MTN. Conglomerates, we also have a Custodian, and we also have a Transcorp PLC. So this is also a general recommendation. Of course, the topics is for your guidance, and so also know that rating companies across the sectors, the first slide, the slide we previously presented is to guide you on the top 10, on the top stock across all the sectors. Why this is also a general recommendation, our usual general recommendation. We also extracted this from almost 60 companies we also cover from 162 listed companies in our equities market. So the general recommendation also has almost 136 stock, 36 stock. So we have the Access Bank ETI. You also see some of these stickers we have also repeated them in the general recommendation. So 1 to 26 is our buy recommendation. 27 and 29 is also our old recommendation. This week we are placing GTB on hold. We still need to do more analysis because it's been moving up in the last 2, 3, 4 weeks, and it's also listed in the London Stock Exchange. The other factors we also need to consider. Fidelity Bank is also on hold. Stanbic IBTC is also on hold. FITSIN is also on hold. While African Prudential, Capri, Lasaco, and the Transcorp Hotel, we are also placing those 4 companies on sale. You may likely see more sale companies from our general recommendation. That's the 60 coverage. While 35 to 36, FBN Holdings and then UACN, we are also working on, we place them under review because if you look at last week, UAC appreciated by almost 80%. We need to ensure that we also conduct more analysis to look at the impact of the new strategic move by acquiring the Chi Hollandia and the impact of that on their balance sheet and their income line. And the company they are also acquiring is not a listed company. We also need to ensure that we have other information that will reflect on the future of that company to be sure that investors are not buying overpriced assets. So that's the reason why we are placing UAC under a review this week. So by next week's presentation, you're likely to see more information as to the rating around UACN. In terms of expectations for the week, oil and gas index turned out to be the worst performer last week. We've seen some result. Total marketing result was not all that impressive. So a lot of people were selling. The same thing, corn oil. That was the reason why it lost 0.8%. We also, last week, as anticipated, a number of Q2 results, half-year performance were announced, some of which were also beyond market expectation, which was the reason why we have seen uptick in some of the tickers we've talked about. We saw NACO, we saw Presco, NASCOM, WAFU, Seplat, FBN, Sterling Bank, Transcorp, Neso, and Aradian, among others. These are the top highly capitalized stocks, and any movement in their price is likely to push, is likely to lead to the uptick in the ASI and increase the market capitalization. As a result of buy interest continue to overweigh sell interest, you are likely to see more confidence in the market because investors are still looking for value in companies that have also posted good results. And we also believe that due to investor continued interest in tickers with solid fundamentals and the expectation for the corporate result for half-year performance of 2025, we are likely to see more buy interest in those tickers that are also looking very promising, and the investor are sure that their return for 2025 is guaranteed. Why we do not rule out the possibility of profit taking tickers that have also gained 52 right? Investors will not sit and be looking for the prices to be going up. They are likely to take profits around tickers that have also gained reached their 52-week high. So that's also expected. But it is believed that the sell interest cannot undermine the buy interest. Bull will still corner, win the bear in the market. So while lastly, we believe strongly that the market is going to also close on with positive notes, but at a moderate level. That may not be as high as what we witnessed in the last week. And we're also believing that the ESI is also likely to test between 143,000 to 145,000 basis points, because more corporate results are still coming to the market, and that will also serve as the drivers and a catalyst to the equities market, and that will also reflect in the broad-based share index and the increasing market capitalization. So I think we have come to the outlook for the week is really that the bull is going to take over the market, but at a moderate level, and you could see from this picture that the bull is going to undermine activities of the bears in the market for this week. We have come to the end of the equities market presentation. I think the floor is open for the question and answer regarding this the fixed income market and the equities market presentation. So the floor is open. We have severally provided many email addresses, but you have yet started receiving weekly recommendation. Okay, thank you. At least you have stated your email. So that's noted. Our IT is also on this call. IT, please take note of that and ensure that they get our email and all our weekly recommendation and the record the video of this morning program. So please take note. We assure you that you will be profiled for this program, and you continue to receive all information, and then all our activities will Elite Capital going forward. So the floor is open. Please, for those who want to indicate, the Q&A chat is also available. You can indicate by raise of hand so that we can unmute you to ask questions. This is Q&A section, please. The floor is open. Please, I'm worried about liquidity around the equities, where there's nothing to worry about. It's not only Nigeria. If you also look at the US equities market, I think I said it in the last week presentation that when we saw an expansion in S&P 500, we now also realize that the S&P grew 1.4% week on week. And then when we trace that, we could also realize that almost out of 500 companies that are also under S&P 500, 82% of the 169 companies that have been released to the market, they did excellently well. That's why it's also expanding. There's no cause for alarm, because all recommendations we are putting forward in Elite Capital, they are based on strong fundamentals. I have been tracking this program in the last 1.5 years, almost 17, 18 months. We have also started a program. We have consistently provided stocks that are with solid fundamentals and information. And some of those things are also playing out now. All this, if you remember, about almost a year ago, Lafarge was almost 32 naira when Elite Capital started recommending. The like of GTB, the like of Access Bank. If we check our recommendation, they are top notch. We don't recommend based on sentiments. We use alpha to recommend. There's no point. So when some of the tickers get to the above region, we advise you. And you can see this time around that we are placing GTB on hold. You'll be wondering, but it's something unnecessary we have also conducted. So there's no cause for alarm. Liquidity around equities market is still very strong, because in the next meeting, we are predicting that in the next meeting of MPC, they are likely to lower the rates, and they will likely to see more funding coming to the equities market, as long as companies are posting good results, and they will continue to throw more bad interest within the markets. Should I continue to hold on oil marketing, or should I continue to hold on the oil marketing stock or sell now? We check capital recommendation, Seplat and what and the Alade, they are top picks. We also have other one. But I mean, the corn oil on sale, Owando is also under review. But if you have stake in Arade and then in the surplus, you can hold it. You can also buy more to also bring down the weighted average of holding if the price drops. Please repeat your comment on Owando. Owando this week is on hold. I mean, is on under review. We have seen the results. As you can see that earnings per share half year of last year is also earnings per share of half year of this. It's a very volatile stock, and then we need to conduct more analysis before we advise our investors on the action they need to take. But give us a little time to conduct more review on Owando and come out strongly with our position, whether it's to sell finally or to hold. UBA right, can someone purchase more allocated? You can apply for additional rights. If they can approve the additional rights because it's also allowed. It's 1 for 13. So every unit you have, every 13 units you have, you are qualified for one. And then it's closing September 5. Is for those who are in the register of the UBA register as at 16th of July. So, but if you want to apply for additional, there's a provision in the right form for you to apply for additional. If you are not granted or if you are not given, they will return your money. But there is a room for that in any public offer or right application. VID is to buy. For now, it's not under the capital recommendation. As I've said, we can't cover all the market equities, all the companies in the equities market. So we have 162 companies. We have done 160, and we are gradually increasing the number of our coverage. So by next week, we are also likely to bring some companies in. But for this week and for now, PFG is not part of the capital recommendation. We can't give you a valid opinion on that. As Owando distributes the tranche, no, they have not done that, the first and the second tranche. We're also engaging the first registrar that registrars the company. As soon as we have information, as at the time they are going to start crediting, we update the client record and we also reach out to all our value clients for action to be taken. So your recommendation on mutual benefit sell buy is for this is also on buy. So it's not sell. So you assisted last week's successful transfer of my shares in the fund house. This kindly updates. Please, your name is not shared. You can send us an email. Our registrar unit and customer service, they are working hand in hand, and then they will give you updated information. So thank you very much. Is it safe to buy Wema back at 24 Naira? It's also very good. It's also part of our top up stock to pick in banking sector this week. If you check their results, what they did for the entire 2024 is what they did in the half year. So the company is a trust of local investors for now. At 24, it's not bad because they have been able to double their earning. And they paid 1 Naira last year. So what they generated to pay 1 Naira is what they have also generated this half year. So for now, we are placing it on strong buy recommendation for this week. Can we have calendar declared dividends? We've also been doing that, okay. The calendar for dividends, we've already been doing that. If you receive this slide, we have also given the updates on the companies that will pay, the qualification date and the date they are going to pay. But because we have limited time for this program, so we skip some of the slide in the presentation. By the time you receive the slide after the presentation, you are likely to see analysis and the information about the dividend qualification calendar. Is FCMB a recommendation last week? Yes, last week we placed it on buy recommendation. It's also part of our recommendation this week. It's buy too. Okay, what's your take on the buy UBA? It's a good buy, but the only advice we give you, if the stock is trading at a lower price in the market, we encourage you to buy from the market. Because if you buy from the right, you may not get credited on time. And that may prevent you the opportunity from selling if the price rally. So if it's trading below the market price, you can buy. But if the price now move, the current market price move above the right price, I think you will exercise your right by ensuring that you also qualify for 1 for every 13 units you are holding as at 16th of July 2025. More questions so that we can wrap up the program. Okay, we have come to the end of this program. Value clients, good morning once again. We thank all the attendees for your time, all the time. We want to assure you that those who have raised 1 or 2 concerns around email, that has been profiled and you'll continue to receive it going forward. After this section, you'll also ensure that you also receive the slide. And then also check your email. Our weekly stock recommendation that cover almost 60 stocks. We've also sent it out for this week so that it can also guide you to take action around buy, sell, and hold. So once again, we want to thank you for attending this program this morning. And we want to wish you a great week ahead. So thank you. Good morning once again. Bye for now.